You're listening to Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin. I'm joined by Rick Ackerman on the line. He is a technical forecaster as well as the author of Rick's Picks. Rick, thanks for joining us this morning.
Morning, Brianna.
So to get things started, let's just kind of get your broader market outlook right now. What are your expectations?
I think we entered a bear market in late April, namely through an internal top, advances over declines, peaked
Mm-hmm.
then, and I think that even if the broad averages were to hit new highs now, uh, we would still be within the technical confines of a bear market.
So I was looking over your morning note this morning, and you had talked about some interesting things that had popped up on your radar. Of course, we had the Fed minutes released yesterday. Still seems like there's Fed's very cautious, but are trying at least to get in a first rate hike in a decade this year. Tell us a little bit about what you're seeing in the TLT.
Well, my perspective is deflationist, and
Mm-hmm.
I've had a pretty good call on interest rates. I've been saying for 9 years now that the Fed wouldn't raise rates, and I've got a perfect track record there. For the last couple of years, I've been shouting that from the rooftops, even when occasionally these regional Fed bank presidents come out and say, we're definitely going for the rate hike. And my answer to the question, when will the Fed raise rates, is still never. I've
Really?
never bought into it. Yeah,
Oh, keep going. Please elaborate on that.
yeah, I've never bought into the idea that the economy was recovering. And on Main Street, it never has. We've had obviously a huge inflation of financial assets, but that's about as far as the recovery has gone. And for that reason, I never believed there was strength enough in the economy for the Fed to raise rates.
Wow, yeah, that's really interesting. I've heard a couple other people. Peter Schiff kind of has the same perspective that the Fed won't ever be able to raise rates. So let's talk about. Someone from our chat is mentioning. I know you and I had briefly talked about oil before the show. Someone in our chat said that you had mentioned you think crude is a dead cat bounce. Can you kind of explain why for our listeners?
Well, crude's been very volatile, and I think it's because the supply and demand picture is
Mm-hmm.
so clear. It so clearly favors the bears, the shorts, that you have enormous short interest in crude, and that has been causing the little flurries of buying. My long-term crude target is 29. The November contract currently
Wow.
trading just under $50. So I think we've got a long way to fall here, but my shorter-term perspective is bullish up to around $55 a barrel.
Wow. Okay. All right. So let's move on to some specific stocks that you had mentioned in your note this morning. Big dog in the market, Apple. What's your long and short term outlook for Apple right now?
I think Apple has lost its mojo. You know, the
Okay.
last straw was a deal they did with Hermes. They designed a wristwatch, and I think Steve Jobs is probably rolling in his grave right now. Apple has become so unrevolutionary. It's you wonder what's next. Maybe iChocolates or something. And they're very late coming into streaming music, about 12 years behind Spotify,
Right.
and 112 years behind Ford Motors as far as an auto assembly line. So I think Apple is just kind of casting about for this or that, and it's still a very good company. I just don't think it's the world beater that it was.
Sure. Yeah, absolutely. You also mentioned Netflix. What are you seeing in Netflix?
Well, Netflix gets a lot of good press as far as the fund managers are concerned.
Mm-hmm.
CEO Reed Hastings can do no wrong. Netflix certainly has a very attractive story, but it's just one of a number of stocks that represent a very narrow focus of institutional money. Apple having, I'm not going to say dropped out of the game, but the breadth of the market, the number of stocks that are really leading the charge keeps shrinking. Netflix is
Sure.
certainly one of those companies, and I wouldn't sell their story short. They're doing a lot of things right, and they have huge growth prospects overseas.
Yeah, Yeah, absolutely. That's a good point. I want to jump back really quick to talking about the overall market because someone in our chat room was interested to see if you had a market low target, what that would be.
Oh, you better sit down for this one.
Oh,
I don't know. I've been sort of fascinated with Bob Prechter's call for a long time, the Dow under 1,000,
ooh.
but he made that before we were closer to 20,000,
Mm-hmm.
and I think the stocks would feel, the market would feel right as rain if the Dow got cut in half right now.
Mm-hmm. Yeah, yeah, absolutely. Talking about some other just big momentum stocks in the market, Tesla got hit with a downgrade this morning. It seems like analysts are not jumping on board this train with the Model X. They expressed some concerns with margins. Let me see if I can pull it some. Yeah, saying that it's not going to be the technical boost that some of their firms expected. Morgan Stanley saying that the Model X is cool but expensive. They expect a price level to dampen the 2016 volume targets, and they even said they think Tesla will explore alternative mobility models to fill the gap. Any thoughts on Tesla?
Well, Consumer Reports was just out with a review of Tesla's latest, and they said that it scored off the charts. Out of a possible 100, I think it scored 104, 105.
Mm.
And, I think investors should be getting used to these negative stories on Tesla. They're simply used to knock the stock down so that the institutional buyers can come in and pick up some bargains. But, going back to the time when the negative Tesla story was the flaming Tesla by the side of the road, just a battery that got overheated, there's always something to say to knock this stock down. But I think in battery technology alone, they've got some things that you should never be short. You should never discount them. I think it is a world beater company, and they're just doing a lot of things right.
Yeah, absolutely. That's a great point. You are also looking at Chipotle. What are you seeing in CMG?
Chipotle looks like the institutional favorite right now, mainly because the earnings are so predictable and they
Sure.
always seem to be rising. From one quarter to the next, the only adjustment that the forecasts need to make is whether the price of pork or onions has increased. But it's a relatively predictable stock, and I think it's somewhat over-favored, but it is within that narrow universe of stocks. It seems very predictable. So, I just see higher prices. My current target on the stock is currently trading 735. I'm looking for a push to at least 791. And if it pushes above that decisively, we could see as much as 855 on the stock.
Mm-hmm. Yeah. Another question coming out of our chat room here. I know we kind of already asked for your market low target, but someone's asking, as a bear, can you explain the huge rally this last week and how low you think the market will go?
Well, I would say about 100% of the buying is coming from short covering. There's no
Short
bullish
covering?
story
Yeah.
right now. We've got the biggest growth story at the margin, China, headed into recession. We had official forecasts of a possible global recession. And I think that the U.S. Quote-unquote recovery is very precarious itself, mainly because it rests on two things. Auto sales, which are generating huge new quantities of consumer debt, and also the housing market, which seems to be languishing at this point, except in places like San Francisco.
Right, yeah, absolutely. Moving back to some specific stocks, what about Twitter? They finally announced Jack Dorsey as permanent CEO. There's been concerns about lack of vision with the company. They're trying out new things with ads. They're testing out this Twitter Moments, which I think is part of Project Lightning. What are you seeing in Twitter right now?
I don't get Twitter. I use it, and I've never seen any growth. I've never seen any results from the things that I put out on Twitter. And I think it's good if you're a Justin Bieber fan and you want to find out what he's doing when he's in his cups at 3 a.m. But I just don't. I don't see the. I guess you could say I don't get it.
Sure.
Stock currently trading 31. I've got an 18 target on it.
Yeah, absolutely. So we've got another, our chat room just has so many questions for you today. So, where then in this type of market, Rick, where are you investing your money? Are you all in cash?
I love long-term bonds,
Okay.
and I haven't deviated from my bullish position there. I've got a forecast of originally it was 1.93% on the long bond, currently around 2.8, and I think the 30-year interest rates could be going to 1.64%. Even though apparently some sovereign sellers have turned ugly against U.S. government paper, namely China, Brazil,
Mm-hmm.
Russia. They become big sellers of Treasury paper. The private buying has picked up demand, so I see long-term rates down as low as 1.64%. If that were to happen within the next 12 to 18 months, you would have enormous capital gains potential because those further out on the yield curve you go, the more leveraged you are to short-term
Mm-hmm.
to fluctuations of rates over the near term. So you could have capital gains in excess of 30% if bonds were to go to my long-term target.
So any thoughts on high yield bonds? There have been a couple of activist investors and people in the space who have expressed concerns over the high yield bond market and that we kind of have a bubble in there.
Well, I think it's indicative of the sickness of this market
Hmm.
that on some days treasuries are struggling, but you see the ETF for junk bonds. It's a Barclays product that goes under the symbol JNK.
Sure.
And just the last couple of weeks, junk has had an enormous rally from about 35 or so, trading 36 and a half. It looks
Mm-hmm.
that may not sound like much, but it's a pretty good thrust on the daily chart. But I have long term. I think uh, junk is headed to a place where we'll be reminded why they called it junk in the first place.
Gotcha. Okay, one more that I saw from your note that I wanted to get your take on was Deutsche Bank. They were in the news. I wonder if it might have been yesterday because they were considering getting rid of their dividend. What are your thoughts on Deutsche Bank right now?
Yeah, they just reported a pretty bum quarter,
Mm-hmm.
somewhere between 6.7 and a $7 billion loss, and they did
Yeah.
cut their dividend. Um, Stock currently 29. I think it's going to $9.10 is my target there, and it's going to be dragged kicking and screaming the whole way. It's not as though a bank that bears the name of its of a nation, Deutsche Bank, is going down easy. No more so than let's say Bank of America. But
Mm-hmm.
it looks to me, I get a negative number on Deutsche Bank of minus $16. I know it's not going there, but I also know from the great financial crash of 2007 and 8 that when I get negative targets, it means that the companies are in mortal danger. These were the
Mm.
same signals that I got in Lehman Brothers and Bear Stearns. So I do think the stock has a huge fall of about 65% from here, 29 down to $9.
One of our chatters is pretty astute. He's picking up. He thinks you must like gold if you think the market will crash. Are you looking at gold right now?
I've been using a target of 817. My subscriber base is heavily oriented toward gold, but I've
Mm-hmm.
always tried to break it to them gently. When I see something that's encouraging on the hourly chart, I'll go with it. You never know. But I do think that gold could head under 1,000 ultimately. In the long run, if you're burying doubloons in your backyard, I think gold will do fine. It's going to hold its purchasing power relative to all other assets. But I'm just very skeptical about some of the mega bull forecasts of gold at 5,000 an ounce or 10,000, or I've even seen forecasts as high as 50,000. And gold's main problem really is that we're in a deflationary world. We're in a global deflation, and that may be news to people who have paid college tuition, grocery bills, or healthcare premiums.
Mm-hmm.
But the much larger force comes from $250 billion worth of derivatives that are all what I would call unactualized deflation. They represent a kind of deflationary juggernaut. And in order to understand deflation, you needn't look at things like the money supply. You should judge it by its chief symptom, which is an increase in the real burden of debt. That has been alleviated because homeowners have been able to refinance down as low as 3%. But over time, the burden of debt will reassert itself.
Yeah, yeah, absolutely. We've only got a couple minutes left with you here, Rick, but I'd love to pick your brain a little more. What about something like Google? I'm looking at the Google stock. Have you followed that at all? What are your thoughts? I know we're going to get their first earnings report next week since they restructured their company into Alphabet.
Well, in July, Google hit almost to the penny a long-term target I'd had over a couple of years, 679. But since then, it has reasserted itself, and I'm using a target in Google now of 687 minimum. Currently trading 638, so we've got a 50 pointer there. And if it gets by 687 for 2 consecutive days on the daily chart, I would say it's got a shot at 727. It's a very difficult company to evaluate because they've got their hands in so many incredible things.
Mm-hmm. Yeah, absolutely. Moving back to Deutsche Bank, another one of our chatters wants to know, do you think that the problems that Deutsche Bank is experiencing is something to expect with some of these other European banks? I know that's something that one of our analysts on the desk has expressed.
Yeah, when the big guy catches a cold, it reflects a condition that's affecting all the banks.
Mm-hmm.
And Deutsche Bank is in no better shape really than Germany and all of Europe.
Mm-hmm.
So I think because Deutsche Bank is in the thick of it all, it is an accurate reflection of Europe's prospects as a whole.
Mm-hmm. Yeah, yeah, absolutely. Well, we're on the line with Rick Ackerman. He's a technical forecaster as well as the author of Rick's Picks. Rick, we've got about a minute left with you here. We want to share some final thoughts on the market for our traders and investors.
Well, I would be very tempted to short this market if it hits a marginal new high. I think that's about all we're going to get is a really nasty bull trap. And I do believe we've been in a bear market since early May when NYSE advanced declines topped. The Dow goes on to new highs and also the S&Ps. It's almost impossible for the advanced decline line to make new highs. So internally we've topped, and I think it's just a matter of time before we see the market come down pretty hard.
Rick Ackerman, he's a technical forecaster and the author of Rick's Picks. You can find him on Twitter at Rick Ackerman. Rick, thank you so much for joining us this morning. We'll definitely bring you back on again soon.
Thank you, Brianna.